Hey Bulls, how we doing? You got the Sherpa here. Time for the Sunday recap, the Monday game plan. We're gonna get right into it. I want to read it. So it's the first trading month of March. I want to read a couple statistics for you. Talk a little bit about the markets. Today we're going to do a simple, easy game plan, just like last week, just like the week before. Anybody who followed on ERX, DVN, FANG, CDEV, my favorite stock of the year, any of those, y'all all made money. You're welcome. We're going to keep doing it. And I'm going to emphasize the short side a little bit with Shorty. While we're here, today is the 6th. Again, first trading week of March. And if you have a Stock Traders Almanac, pull it out, follow along. If you don't, go buy one. Buy it from my website, everbullish.com. And the lesson for today, historically, March is strong early in the month, with the first 2 weeks of trading typically being up 57% of the time and down 42% of the time. The rest are within the 1% range there. So beginning of March, that's a good thing. I don't know if we're going to have that this time. The Fed is fucked right now. I don't know if you saw the title of this post, but I'll show it here in a second. Let's do the reading. Exercising the right of occasional suppression and slight modification, it is truly absurd to see how plastic a limited number of observations become in the hands of men with preconceived ideas. That's Sir Francis Galton. Never heard of him. Pioneer of statistical correlation and regression. Okay, maybe I should have heard of him. This is a guy from the 1820s, so we can throw that one out the window. I don't really know what's going on there. What counts more as luck is determination and perseverance. If talent is there, it will come. Do not be too impatient. That's Fred Astaire. All right. We're not finding any inspiration here, and I've got some shit to show y'all. So let's get straight to it. I'm going to add to the stream the game plan. This is for my Substackers. This comes out on YouTube on Tuesdays. I'm going to go ahead and put this out for the Reddit guys as well. That's kind of where I've been getting a lot of my customers and clients. So don't hate me for spamming. I'm the spamming Sherpa because I'm making all y'all money. I don't really give a shit. Keep hating. Okay, here we are. This week's game plan: bullish on oil, bullish on Apple, bearish on everything else. Shorty, SHRTY, SRTY, that is triple inverse negative on the Russell 2000, and there's a reason for that. And by the way, did I tell y'all that the Fed is fucked? It is. All right, bulls. Happy Sunday, first trading week of March. Long and all out on oil. I want you to beg, borrow, and steal. It is that easy. ERX is the triple, actually the double levered on the mega cap oil companies. These are your Exxons. These are your EOGs. These are your Marathons. These are your Sunocos. These are the Valeros. These are the mega cap, deep-pocketed, almost $1 trillion capitalized companies, biggest oil companies with the smartest people on earth. If you want to own those in a time when commodities, look at that segue, Sherpa, baby. That's a right now, oil, $113.40. Who would have thought? I remember being on the golf course while all my buddies from Exxon and Chevron were scared of getting laid off, and oil was at 45. It all went all the way down to 30, $35 a barrel, $30 a barrel. And that was about, call it 5-6 years ago. Now we're back up. Who would have ever thought? I did. I'm sure you did. So did you have the balls in the nutsack to put it on the table and buy? I hope you did. And right now, there's no better trade. We have inflation. We have raising interest rates. We've got a war in the Ukraine. We've got sanctions on damn near the entire northeastern part of the globe, or I should say the eastern part of the hemisphere, right? By the way, oil, the second largest oil reserves in the world are actually in Russia. I just found that out in studying. But again, if you want to follow me on these oil trades, there's a lot of ways to do it. You can do a 1-month option on FANG, a 1-month option on CPE, a month option on DVN. You can buy leaps if you want to. I don't buy leaps. I think those are for wimps. CDEV is my favorite stock in the space. It's a small cap stock with oil assets. Let's see if I can. Yeah, there we go. It's lean from the days of $35 a barrel, and that was just 4 or 5 years ago. There we are. So if you wanted to listen and you wanted to follow the Sherpa, or you wanted to see some of the results that we're providing here, ERX was up. This is just on Friday. ERX was up 5%. Shorty, which is betting against the small companies that typically do poorly in inflationary times and rising interest rate environments, that are in sectors that don't necessarily particularly do very well, and they don't have the deep pockets to outlast a slowing down economy, i.e. what is happening when the Fed tightens by buying bonds, you short you short small caps, and you do it with shorty. I also told you to buy MRO, and I have been for the last 3 years. I also told you to buy CPE, and I have been for the last 3 years. Same with FANG, same with Devon, same with EOG, same with PDX, which is Pioneer, another Dallas-Fort Worth company. Devon, DWAC is the Trump SPAC. I'm not in it anymore. I still like Hive Bitcoin technology. I still like PD. PDI has actually changed now. I need to take that off my watch list. Tesla, love it. Academy Sports and Outdoors, it's a massive buy right now. And then Lulu, our baby Lulu, she doesn't just look good in yoga pants. She looks good in stock portfolios. Okay, let's keep it moving. This was from a couple days before. So we saw it inch up from actually 92 at the beginning of the week. Call it a week and a half ago, 2 weeks ago, all the way up to 111. I tweeted this out. If you're not following my Instagram, it's Ever Bullish. Just the word Ever Bullish. I'm going to tweet out or at least post out and share out and story out some things that are really influential to you. So while you're learning how to trade along with some of the other bulls out there, you can follow the Instagram and you will be up to date on some of the things that are going on. The real money is in the Substack. So make sure you subscribe. $20 a month, $200 a year. Quit anytime you want, but I don't think you will. And then remember, short everything else. I already explained that. That was up 14% last week, by the way. This is the Stock Twits top 25 S&P 500. So these are the best performing stocks this year on the S&P 500. We're 2 months in, so we should know. And check this out: oil. Let's see when Kroger. So it took us 15 stocks to get down to the first non-oil company in there. Schlumberger, CF. Williams. Yeah, so there we are. So there's only 2 companies. One's a tech company and one is a consumer staples company, and Kroger, as well as L3 Harris Technologies. That's a defense company. So just be mindful. Why do your friends that call themselves financial advisors and family members, why does your Fidelity rep, why does your Vanguard rep, and even the Goldman rep say, well, we need to be properly diversified? Okay, why? So you could walk away from an average return of, I don't know, call it like 70, 60% if we annualize these numbers throughout this year? Fuck that. Follow the Sherpa. All right, let's look at interest rates. This is why the Fed is in trouble. The 10 years come back down. For a few weeks, we're only a few weeks away, that is, from the first meaningful rate hike in 11 years. I was in the business then. I remember this. Again, another thing, if advisors are telling you to buy bond funds, they better not have a duration of anything more than 2 or 3 years, or else you're paying them to lose your money. I completely am against any type of Barclays aggregate or investment grade bond fund out there. If you want to know what to actually buy, if you do need some safety in your portfolios, go to everbullish.com, buy the dividend portfolio or the Everbullish Balance portfolio, in which we use alternative to traditional bond funds, where you can actually make money and have some income as well as a reduced amount of risk. So don't forget to do that. But what I was going to say about interest rates, look at this. We're at 1.7 on the 10-year. The Fed's going to hike up interest rates by just 0.25%, and they say they're going to do that 7 times this year. I'm here to tell you, hands on a Bible, I would bet everything I have a million times over that there aren't going to be 7 rate hikes this year. What's going to happen is when they raise that federal fund rate, it's going to kind of ramp up the long tail of the yield curve, and we're going to see this 10-year probably tick up probably to about 2.1, maybe. That's about the highest it's been. But what happens is when that happens, then the stock market typically correlates negatively, and then the rates keep coming back down. If you look back on my post from about 2 months ago, this was at 1.9% and it came down. All you hear is inflation, raising rates, interest rates going up, interest rates going up, interest rates going up. It's not that easy, guys. The God's honest truth is that I have more fear associated with rate hikes and the market not absorbing that or digesting that well than I do about what's going on in the Ukraine. And that is not to, there's in no way to diminish what's going on over there. I actually have a post about that next. But pro tip, historically speaking, oil prices and gasoline prices going up precede recessions in the next 3 years 81% of the time. I got that from the Stock Traders Almanac. Also, remember that the reason raising rates is happening is that inflation is happening, and that means that the economy is theoretically growing. The economy is theoretically growing, and the fire is out of control. We got to dump some water on it. That's what rate hikes are. So oil prices are going up. That's more money that the consumer has to spend, the average family has to spend to do their daily tasks like commuting to work and back. Therefore, they can spend less money. Therefore, less money goes into the economy, and therefore the stock market goes down. That's the theory. But also remember, take this with a grain of salt. There's super cycles and extended cyclical cycles that happen in the economy over 10 to 15 years for cyclical cycles and 40 to 50 years for super cycles. And sometimes we can stay inside of one of those cycles, which we're in right now, again, for about 13 years on that side of things. So speaking of Russia and Ukraine, just God bless the folks that are stirred up in this shit. It takes incredible courage. Inspirational patriotism is shown by the Ukrainian men and women, which I think is just simply incredible. I wanted to shout that out because I just spoke about it earlier. And I think that this is just an interesting thing that's happening here. This is the first time sanctions are actually being implemented with the amount of certainty, or I should say with the amount of results in the short term that are being shown. We're basically crushing and crippling the Russian economy through sanctions and not war. Let's all, hope out there that there's some chance that this could happen and make war inevitable. I'm sorry, not inevitable, obsolete. If you can do this quickly, I think it really shows how impactful it is that we all work together. And on that sentimental, cheesy chase note, remember, one of the silver linings here is that Bitcoin, DeFi, crypto, Ether, technology, this is showing its utility in a way that we couldn't have ever asked for. It's not all about just buying drugs off the Silk Road anymore, right? This is how we can get money in the hands of Russian soldiers today with no fee, no cost, no charge. Think about that. Ukrainian soldiers, not Russians. I guess they could too. I don't know. You get what I'm trying to say here. So somehow Bitcoin and Ether actually both fell. Check out this tweet. This tweet was from Thursday, and then this is the price today. So Bitcoin actually went down from 35,000 back to 43,000. That is back down to just below 40. I say buy the dip, sell the rip. Same thing with Ethereum. Notice how they're tracking together. If you're not in crypto, you need to learn about it. I'm tired of hearing people go, "Oh, I don't get it." I don't give a fuck if you don't get it. Buy it anyway. And then finally, go buy the Ever Bullish One portfolio. Go buy the Ever Bullish Balance portfolio. Consider taking the wisdom that I'm imparting to you guys and following along and playing along and beating the market and not having to be at the mercy of advisors that don't give a fuck about you. So with all the success of the Ever Bullish website, we're getting over 1,000 views, unique viewers a month. And then also the Sherpa Substack, which has quickly risen to now the number 5 Substack in the investment and trading topic in the entire world. We've just had an awesome reminder of how great and unlimited and limitless your happiness, your potential, and also your trading is. So trade limitlessly. And I want to get some cheesy chase on you. I snapped this yesterday coming out of yoga class there on South Lamar here in Austin. And I just wanted to say, follow me. Let's go to the top of the mountain together. Don't underestimate yourself. If you want to see some client testimonials, go to my Instagram. You'll see some portfolio followers that are talking about how well they're doing in the portfolio. And then you'll also see a couple trading gurus that have been following me. And the most recent clip was I got a text from one of my followers in Pittsburgh. She's actually a financial professional, and she basically was touting how I think she made $1,200 just last month following the straddles, following the calls, and following the option trades that I recommended. And it's a beautiful thing for all of us. So thanks and happy trading. Remember, your potential is limitless. Be a limitless trader. Follow the Sherpa, AFG, LFG, LGR, chase that Ever Bullish, the Stock Sherpa on YouTube. Let's go get it, boys.